We're still on monthly debt obligations, but now we're down to garnishments. Let's talk about garnishments. Let's see if we can just click and get there. All garnishments with more than 10 months remaining must be included in the borrower's recurring monthly debt obligations for qualifying purposes. There's no note in there about being able to decrease the income to count for that, so it's a debt. A garnishment is a debt. Home equity lines of credit when the mortgage that will be delivered to Fannie Mae also has a home equity line of credit that provides for a monthly payment of principal and interest or interest only. The payment on the HELOC must be considered as part of the borrower's recurring monthly debt obligations. If the HELOC does not require payment, there is no recurring monthly debt obligation, so the lender does not need to develop an equivalent payment amount. That's good to know. If it doesn't require payment, you don't have to count it. If the HELOC does not require a payment, there is no recurring monthly debt obligation, so the lender does. That's pretty cool. Okay, I don't know if I've never had a home equity line of credit that didn't require a payment. I don't think. Installment debt. An installment debt that is not secured by a financial asset, including student loans, automobile loans, personal loans, and timeshares, must be considered part of the borrower's monthly recurring debt obligations if there are more than 10 monthly payments remaining. However, an installment debt with fewer monthly payments remaining also should be considered as recurring monthly debt obligation if it significantly affects the borrower's ability to meet his or her credit obligations. See below for a treatment of payments due under a federal income tax installment agreement. So a timeshare account should be treated as an installment debt regardless of how it's reported on their credit report or other documentation. That is, even if reported as a mortgage loan. A timeshare account should be treated as an installment debt even if it's reported as a mortgage loan. I don't know what the significance difference would be there. I do find myself see below for a treatment of payments due under a federal. No. What caught my attention was, however, an installment debt with fewer monthly payments remaining should also be considered as a recurring monthly debt obligation if it significantly affects the borrower's ability to meet his or her credit obligations. I don't know what significantly means. If it pushes their DTI from 47 to 54, is that a significant impact? I don't know the answer to that. I'm curious. Anybody has an opinion on that, let me know. Share, comment. Lease payments. Lease payments must be considered as recurring monthly debt obligations regardless of the number of months remaining on the lease. This is because the expiration of a lease agreement for rental housing or an automobile typically leads to either a new lease agreement, the buyout of an existing lease, or the purchase of a new vehicle. So you've only got 3 months left on the lease. Doesn't matter. You got to keep that counting that debt. Rental housing payment. The housing payment for each borrower's principal residence must be considered when underwriting the loan. For the following scenarios, the borrower's monthly rental housing payment must be evaluated if the borrower does not otherwise have a mortgage payment or no housing expense. For non-occupant borrowers and for second homes or investment properties. The following list provides examples of acceptable documentation to verify the rental payment. I think what this means is if you're renting your primary residence and you're buying a second home, we got to count the rent. If you're a non-occupant borrower and you're going to help, your son or daughter buy a property and you're renting yours, we got to count your rent you're living as a renter. We got to count your rent and your DTI. That's probably rare for both. It's rare that you're buying a second home when you're renting your primary residence. I guess it's less rare. There are people that rent and own investment properties. That's more common. The following list provides examples of acceptable documentation to verify the rental payment. 6 months of canceled checks or equivalent payment source. 6 months bank statements reflecting a clear and consistent payment toward an organization or an individual. Direct verification of rent from a management company or individual landlord, or a copy of a current fully executed lease agreement and 2 months canceled checks for equivalent payment source supporting the rental amount. Note, refer to documentation and assessment of a non-traditional credit history for rental payment history requirements when using non-traditional credit. This would be when you are doing things like no score loans, you would need some non-traditional credit. Again, hey, I am Josh. I'm with Churchill Mortgage. If you're looking for somebody to do, if you're looking for a great place to work, you're looking for a great team, you're looking for somebody that will help you and mentor you and help teach you a system, reach out to me. I would love to serve you, love to help you, love to partner with you. And Churchill Mortgage is an ESOP. We're the lender that's heard on the Dave Ramsey Show, the only lender that I know of that Dave Ramsey recommends or has ever recommended. Dave Ramsey, that has its pros and cons, but working with an ESOP, working with a great team, that is a no-brainer.